fact, it's cold as hell, and there's no one there to raise them if you did.
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44, a complete AI creation platform.
Be a long, long time to touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out the fuse out here alone. And I think it's gonna be a long, long time. Touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out the fuse out here alone. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out the fuse out here alone. And I think it's gonna be a long, long time till touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out the fuse out here alone. Mars ain't the kind of place to raise your kids. In fact, it's cold as hell, and there's no one there to raise them if you did. And all the science I don't understand, it's just my job 5 days a week. A rocket man, rocket man. And I think it's gonna be a long, long time till touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out the fuse out here alone. And I think it's gonna be a long, long time till touchdown brings me round again to find.
bringing high-speed internet to communities that no terrestrial infrastructure has ever reached in the history of capital markets. Transforming data as the home of innovation and the home of the innovation economy. Nasdaq is incredibly proud to physical and digital infrastructure of the future. Stands as your mission is now. Wait to see what comes next. As the home and now of innovation, join me in welcoming SpaceX's President and Chief Operating Officer, Gwynne Shotwell, proud to be SpaceX's partner as it builds the physical and digital infrastructure of the future. Your mission is now backed by the financial engines of the public markets with access to every investor everywhere. Congratulations to the entire SpaceX team. We cannot wait. Comes next. And now please join me in welcoming SpaceX's President and Chief Operating Officer, Gwynne Shotwell, for her opening remarks.
Good morning, everybody. So excited to be here. Today we make history again. History of making history. I want everyone to know that we did open this morning in a rather exciting way. We launched. Falcon 9 launched Starlink satellites to orbit. So what company would do such a thing on the day that they open in the public market? SpaceX would, right? I am so proud of this team. Today, This year, we are 24 years old. Elon founded this company in 2002, initially to build rockets and spaceships that will take humans to Mars, and even beyond. We've not quite gotten to Mars. We're almost at the moon, but let's just quickly run through the amazing things you guys have accomplished. 2008, 6 weeks after a failure of Flight 3 Falcon 1, we got the first liquid fueled rocket to orbit from a private company. Yay. Yay. By the way, I should have prefaced this with everyone said we could never get to orbit. Check. But it was a little rocket. Then everyone said, well, you can't get a real rocket to orbit. 2 years later, we got a real rocket to orbit, Falcon 9. Oh, well, you'll never get to the space station, because that's what we really want to do, right? We want to take humans outside Earth, but you'll never get astronauts to the space station. Check. We did that too. Doubters, right? Oh, you'll never fly Falcon 9 enough. You'll never get to production. 165 launches last year. Check. You'll never build a rocket large enough to take humans to the moon and Mars. We build one. This year, I believe we'll get to orbit with that vehicle, and we'll recover the second stage. We've already recovered the first stage and reflown it. So good on you all for that too. With the merger, the acquisition of XAI is a group on the largest coherent gigawatt class compute on the planet, which will help us truth seek and understand the. So congratulations to all of us for that. So we're about 22,000 strong. I'm super proud that over half of us actually bought additional stock in this opening, totaling $1 billion. So thank you for that too. But really the thank yous go to all of you for hanging in there, for keeping a straight spine as the doubters doubt, to achieve historic things every day, multiple times a week. Thank you, all of you, for doing this. And I hope today is a day that you feel great about and that you're celebrating. Take a moment. Now, the Falcon Recovery Team can't take a moment today, but everybody else can. And I hope Falcon Recovery Team could take a moment a little bit later. Yep. And also, thank you to the families, the partners, the plus ones, the children, the brothers, the sisters, the parents that have lived through long that have seen launch failures, that have seen AI compute go down, that have seen kind of the trials and tribulations of this incredibly difficult business. Thank you so much for hanging in there. I know I can't do this without my incredible partner and husband too. Been a great source of support for all the SpaceX team, and you are a huge part of this success too. So thank you for that. I haven't mentioned Starlink and Starlink Mobile yet. We're probably connected through that. So incredible team to do that, connecting those that are unconnected. And I'm really excited about the future of that. In fact, as I was meeting, like literally almost 1,000 people in person over the last 2 weeks and almost 100,000 through telecommunications, hopefully on Starlink. What was clear to me is I was talking about the future and they were asking questions about what we'd achieved and what we're going to achieve. What was clear to me is that we are just, it might feel like a long haul, but it's going to be even more exciting going forward. So I want to introduce my boss of 24 years, the chairman of this incredible company, the CEO of this incredible company, and the chief designer of this incredible company, Mr. Elon Musk, who is in Starbase, Texas, and he's celebrating there with 4,000 or 5,000 people. Thank you so much.
Well, thank you, Gwynne. Gwynne Shotwell has been an incredible partner and was one of the first people to join the company. And thank you, Gwynne. Oh, she's in New York, of course. Where is she? Yeah, it is certainly hard to believe that a little company that started in a warehouse in El Segundo is now going public for with the largest IPO that ever. And let me tell you, if people had told me this was going to happen, I was like, man, you must be smoking some really good crack, because I think this company's going to fail. I mean, I gave SpaceX less than a 10% chance of succeeding at all, to be clear. In fact, I told people this. I said, look, we're probably going to fail, but we should give it a try, because if we don't, if there's not a new company that enters space, we will never be a truly spacefaring civilization. The other aerospace companies, they build good rockets and everything. They were simply not pursuing the technology that's necessary to make life multiplanetary, to make Star Trek, to make the exciting science futures that we've read about real. And that's what SpaceX is all about, is to take the fiction out of science fiction and create an exciting, inspiring future for everyone. We want to be able to take anyone who wants to go to the moon, anyone who wants to go to Mars, or anywhere in the solar system, and maybe beyond the solar system at some point. We want to be able to take you there. Not just a few astronauts. I mean, literally you. If you watch, whoever you are watching this, SpaceX wants to be able to take you to the moon, take you to Mars, and ultimately beyond. And And I'm confident at this point that with the incredible team that we have here, that we will do that for you. I always think about this. There are always problems on Earth. There are always problems on Earth. There are always things that we wish to be better, that we want to solve here on Earth, and we should solve them. But there also have to be things that get you excited about the future, that make you glad to wake up in the morning, because you can't wait what happens next. And that's the future that SpaceX wants to bring to you. Yeah.
Mars ain't the kind of place to raise your kids. In fact, it's cold as hell. And there's no one there to raise them. If you did, and all the science I don't understand. just about 5 days a week. A rocket man, rocket man. And I think it's gonna be a long, long time. To touchdown brings me round again to find the man that think I am at home. Oh, no, no, no. I'm a rocket man, burning out the fuse out there alone. And I think it's gonna be a long, long time. Touchdown brings me round. I'm not the man that think I am at home. Oh, no, no, no. Rocket man, fuse out there alone. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. I'm not the man I think I am at home. Oh, no, no, no. I'm a rocket man, burning out the fuse out there alone. Rocket man. And I think it's gonna be a long, long time. To touchdown brings me round again to find I'm not the man that think I am at home. No, no, I'm a man, burning out the fuse out there alone. And I think it's gonna be a long, long time. Touchdown brings me round again to find I'm not the.
What are we getting? I don't want to say we. What are the bulls out there getting wrong about AI? Because you've made no secret that you don't see any there.
Yeah. So I think people are conflating a semiconductor rally with an underlying successful business, which doesn't really exist. Anthropic's current revenue growth, which is deeply questionable in the fact that they leaked profitability, manipulated by Elon Musk, of course, their growth is coming because people cannot measure how much an AI task actually costs. And a couple months ago, Anthropic started charging their enterprise customers the actual token rates. What this has led to is suddenly businesses are going, oh, how much money are we spending? I think it was Uber's COO, Andrew McDonald, said that they're having trouble justifying the AI spend based on the actual return, that one can actually measure it. So you've got a thing where you can't measure the costs and you can't measure the return on investment. What do you call that? You call it a thing without an ROI.
Isn't it though safe to say, Ed, like I think about this, I agree, like that there is going to be, when there's any new technology, there's a lot of money thrown at something, right? A hot new idea, whatever it is. And that ultimately, like we've talked with some experts in the AI world, they're saying all of these large language models, not everything's going to exist because right now it doesn't cost you anything to use it. But at some point there will be a cost and people will start to select what they want to play with. And so is it a case of right now, I mean, at some point there will be some winners, some losers, and we'll see some things filter their way out, and that there will be some return on investment for some of the larger players when it comes to AI? Do you not see some winners and losers in this, or some winners in this?
I think the winner is Jensen Huang, and the winner is the construction firms who have got prepaid for all the data center construction. Maybe Sam Altman and Darren Amodei who've become billionaires through this. But when it comes to the actual businesses, you can't find anyone who can measure the ROI because you can't do it. So when it comes down to the model companies themselves, they're horrifyingly unprofitable. I think OpenAI lost like 20-something billion last year. Anthropic's probably not far behind this.
And we don't have access to their books.
Of course. But this is based on
file for an IPO.
And that's the thing. When we see these S1s, I think it's going to be kind of a massacre, because I think that people have this view that these companies are becoming more profitable or even have a path to profitability, and they don't have one.
But, somebody could say, and Carol, we talk about this all the time, Amazon for years didn't really have profits.
Well, that's the thing.
Now it's a behemoth, and now it's then AWS came along, and now it's this juggernaut that, has made a lot of people very wealthy.
But the thing with Amazon is between 2003 and 2017, Amazon Web Services, actually all Amazon CapEx, was around $57 billion normalized for inflation.
Between that whole time?
In that entire time. Wow. And they were cash flow positive in 9. The classic thing with the .com reconciliation thing is, well, things went poorly, but after that, there was useful infrastructure. No such story exists here. GPUs, AI GPUs specifically, have very few other use cases. And on top of that, if you're talking about incomplete data centers, it's going to cost just as much money to finish them today as it will in 10 years. And similarly, a Blackwell, a B200, GB200 rack, NVL72 rack, for example, will cost just as much, if not more, in electricity 10 years from now. There is no pick up and fix this story. Perhaps there'll be some on-device large language model use, but we are talking an industry that has absorbed over $1 trillion in the last 3 years, the media attention from everyone, and these continual stories about the magic of AI. But when you say, hey, is it making any money? They go, oh, no. Oh, we couldn't possibly. We don't do that yet. But don't worry, Uber lost a lot of money. Uber burned about $32 billion, which is less than half of what Anthropic has raised in the last 6 months.
So I think it's safe to say there's a lot of smart investors who are in this. Smart companies are in it, right? Pick your big hyperscaler. They obviously want to be around for a long time. So I'm just like, how do you explain their bets on all of this?
So I have this theory called the .com bubble, which is the hyperscalers are out of hypergrowth ideas. We haven't had a new iPhone. We haven't had a new cloud computing. We haven't really had a new platform that would turn into the next Google search or Amazon Web Services. So they thought that large language models were going to be the panacea, that they were going to be creators of API growth, that they were going to be the new infrastructure play, load up the GPUs, sell access to everyone. The problem is no one checked to make sure any of this was profitable. And we still don't know if GPU compute is actually margin positive, which is crazy considering the amount of money going into it. And when we look at the companies that actually are selling it, CoreWeave, for example, they burn billions of dollars, 20-something billion dollars worth of CapEx this year, about the same amount in debt. And their customers are NVIDIA, OpenAI through Google, OpenAI through Microsoft, and Meta, who does not have an AI strategy. It's very strange, like that Twilight Zone episode with the scary child. Like, we're all trying to pretend that Meta actually has a plan here. They don't have one.
So is Apple kind of smart? Because we've talked with our Mark Gurman about this. Have they kind of been relying on Google, right, and Gemini, and not necessarily doing that big spend?
They're not doing any CapEx on.
No, exactly.
Well, I think what happened with Apple is they released Apple Intelligence, which may be the largest scale anti-tech radicalization in history. My non-tech friends, I've heard nothing about AI from them. Moment Apple Intelligence comes out, like, this is the worst thing I've ever used. And I think that made Apple go, maybe not. Maybe we should take a step back. But their CapEx is minimal. They're spending about as much in CapEx, ironically, as Amazon was spending on AWS way back when. So I think Apple is cautiously holding back and kind of absorbing the headline after headline, the ridiculous headline of Apple's behind in AI, behind in a losing proposition, more like.
We're speaking with Ed Zitron. He's the founder and CEO of Easy Primary Research. He's got the Better Offline podcast. He writes the Where's Your Ed at newsletter. Ed, just so everybody's aware. Do you have skin in the game? Are you shorting any of these companies? Do you have a financial interest in what you're talking about?
I invest in words. I love doing the newsletter I do. I think I'm spreading a great deal of financial literacy and of how to pull apart the narratives of these companies. But no, I don't, because the market is irrational. And the market is inherently invested in something that I think is destructive, especially the SpaceX IPO. And OpenAI and Anthropic should not be allowed to go public. They are dangerous, lossy companies that are going to be added to indices that will sink 401ks.
You know, it's interesting that you say this, because I got a text on a group chat today from a friend of mine who's like not happy about the idea that he's, as an index fund investor, he's going to be forced to have to buy SpaceX, for example, which is sort of the subject of yesterday's big take. Everybody should check it out on the Bloomberg terminal. There's a lot we want to get to with you. We only have a couple more minutes. You got to come back and do some more with us. Before you go, what happens if markets, you said markets are irrational right now. If markets become efficient, and I think a lot of people think markets are efficient. If markets view this the way that you're viewing this, what are the repercussions of that bubble bursting?
I think the majority of gains based on AI success are going away. I think the neo clouds like Iron, CoreWeave, Cypher Mining, and the TerraWolf as well, all of them, perhaps not going to zero, but they're going to be shells of the corporations they used to be. I actually don't know how CoreWeave survives this. I think NVIDIA is looking for the most aggressive haircut you've ever seen, for example, because they currently are not, based on research I've done, it looks like it's taking about 6 to 12 months to install a single quarter's worth of GPUs from NVIDIA. They've yet to put out any kind of guidance about this. They clearly know. But if you go and look at Microsoft, for example, none of the data centers that they have announced have broken ground since 2023 have actually been finished. The Fairwater data centers, they've said that was fully complete. It's not even half complete. It's one of the strangest things I've seen in history. And I think what it is that these companies know that they can get away with it. They know that the SEC scrutiny isn't there. And they also know that the froth is big enough that everyone kind of loses together. It all comes out in the wash when it's proven that there is not a there.
Do you get calls from these companies?
No, I don't hear back from Microsoft or OpenAI or any of them.
But you reach out?
I do. I asked for comment and I guess my email gets lost. Sam Altman, Dario Amodei, there's PR people have mentioned coming on my show, but then go quiet, probably because I'm quite critical of them. They know I'd ask the questions they don't want to answer.
Why do you think, I want to poke at something that you mentioned earlier, why do you think OpenAI and Anthropic shouldn't be allowed to go public?
Because they are lossy companies. They do not have a path to profitability. Anthropic, they leaked, or however, that they were profitable. They were profitable in 2 months when Elon Musk, they gave them a discount on their compute through SpaceX. Clearly planned leaks, clearly planned financial engineering. No normal profitable company does things like this. OpenAI and Anthropic are both horribly unprofitable, and they are not getting better. They have the information reported a few weeks ago, OpenAI had a negative 122% non-GAAP operating margin.
But again, just because a company doesn't make money doesn't mean it shouldn't go public. Just because a company is not profitable doesn't mean it shouldn't go public.
Let me reframe this then. I don't think these companies will survive.
Okay.
And I think that investors they're doing exit liquidity for venture capital. And I think that these are dangerous, unstable companies that have faced basically no real scrutiny for most of the years of their investment. You have journalists and analysts who are actively cheering them on. This is a dangerous precedent, and it's a dangerous thing for retail investors who are being conned by this. And I mean, the whole ROI conversation, that is a result of most people experiencing AI via subscriptions that are subsidized, meaning you can burn anywhere from $3 to $13.50 for every dollar of your subscription. So people don't know how much this stuff actually costs, and they are investing and believing in it and creating workflows around it based on services they likely cannot afford long term.
Just got 20 seconds here. So we have a story. Uber has set usage caps on some AI-powered tools used by its staff to manage costs after blowing through its AI budget earlier this year. We're going to increasingly see these stories, in your view?
Yes, we will. And we've already heard a similar story coming out of Walmart. I think Bloomberg reported yesterday.
Peter, I think a lot of people know you as the K-shape guy. And nowadays, we hear about this from everyone, whether we're talking to executives, or executives are talking on earnings calls, or we're talking to analysts or investors here on our program. It's not getting any better. In fact, it's getting worse.
Yeah, and in fact, it's no longer a straight line K. The arm of the K looks almost parabolic, and the leg is turning almost straight down into despair. And so the divide between those at the top and bottom isn't just economic at this point. It's almost become two life experiences that bear nothing in common. And I worry that those at the top are doing all they can not to see those at the bottom. But in a world of social media, those at the bottom can't help but see this enormous overabundance that exists above them.
I want to get more into that. There was a great piece in The Atlantic this weekend. The vibe session is over. The perma session is here. It spoke about how households are feeling worse about their finances and the economy than they did back in 1970 during great inflation. So you talk also a lot about the confidence gap. How much does the pullback from lower end consumers have to do with the fact that they just don't see any upward mobility?
It's not only that they don't see any upward mobility. The AI boom has now put a target on their back. They believe that it's a zero-sum game, and they're looking at all of these gains being made in AI stocks and believing that ultimately it will come at their expense. And so a lot of this has to do with how both groups imagine the future. And the imagination of the future could not be more divided in terms of extraordinary optimism at the top and this dire level of despair at the bottom. And it's the despair that troubles me, because I know that ultimately that is what sets people into the streets.
Are you seeing, I want to talk about those people and the repercussions of this, or the ramifications of this, in a minute. But before we do that, just we hear so much about the resilience of the American consumer. And I hear what you're saying about despair and that bottom rung of the K, but are we seeing an uptick in people missing car payments? Are we seeing people spend a certain demographics, put a different type of payment on their credit card? We talked to the folks at the buy now pay later firm, and they have their client is the average American, and they say the average American is doing so well right now.
Yeah. So if I look at credit card delinquencies, which this month look like they're going to come in at about 13%. What is so striking to me is if you look at it mathematically, that level is historically high, but it comes at a time when within the card portfolio, you have enormous convenience balances that are absolutely riskless for the card issuer. And so on their own, I suspect that the quality that the card issuers are seeing among their lowest tier is distressful. And the challenge right now, Tim, is that we have this bifurcation where not only are businesses like the airlines dependent on the top, but I see so many derivatives of wealth, including our banking system, that require at this point those at the top to continue to do extraordinarily well. It's fascinating to me that a bank like JP Morgan, at the bottom of the financial crisis, there were about $3 worth of credit card balances to private banking balances. Today, the lines have crossed. They have more credit outstanding to private clients than they do to Main Street credit card holders. So there's been an enormous wave of credit extended to those at the top with the belief that they will never default. I think that when you see so much of our economic system now dependent on those at the top, it begins to beg that question.
This bifurcation, Peter, has been a problem for years now and seems to only be getting worse, as you just mentioned. What can policymakers do to remedy this? And if they don't step in, what is the worst case scenario?
I think policymakers need to be thinking about the needs at the bottom of the hierarchy. We know that food insecurity is an issue that leads people to protest and riot. We know that basic health care is financially debilitating to those at the bottom. And so I think we need to be thinking about the basic needs and ensuring that there is a safety net. And I think of it as a social safety net that prevents despair from setting in. And I think that we need to be cognizant of the fact that there is a growing population that feel hopeless. This ultimately leads to action.
Well, what kind of action? I think a lot of people watching this, especially on primary day in Texas, and as we do get into the midterms, would think that there are electoral consequences. And certainly that was a lot of the navel gazing that we saw post 2016 election. But what are ramifications of this?
So the ramifications, if you go back to the fall, to me, it was no coincidence that in the midst of this affordability crisis that everybody was talking about, you saw a more populist mayor elected here in New York.
Okay.
Who resonated both left and right. One of the things that is so telling about this latest consumer sentiment data is that for the first time, we have a meaningful drop in confidence among Republicans. And so the bottom is purple. It's not red or blue. And so that purple wants change. And candidly, neither party has done anything to suggest that they have action in place to serve those at the bottom.
So do the people at the bottom have to be served through political action, or is there a way for this to be solved without Washington's help?
I think you're seeing it on a local level first.
Okay.
As I would expect. And ultimately those changes on a local level lead to national.
So
change.
local, like New York City and Zohran Mamdani, our newish mayor.
Yeah.
Where else?
So I think we're going to see examples of that this fall, where you have incumbents on both the left and right who are voted out. And I think it's quite interesting in some of the political ads, incumbents aren't even talking about the fact that they're incumbents.
Like
because they know that it's
governor of California, someone like Steve Hilton coming in, or mayor of Los Angeles, someone like Spencer Pratt coming in, for example. Yeah. Is that what you're talking about?
It'll start at a local level.
Okay. Interesting.
And part of that is every crisis is local. And politics are incredibly local when confidence is low. And so that's where it's tangible, it's immediate, it's proximate. And so those are where people demand change first.
I'm really interested, Peter, in this idea that you mentioned of America becoming more of an ownership economy, where more and more goes to the people who already own homes, who already own financial assets. Can you talk a little bit more about how this incredible run in AI companies is worsening that?
Yeah, so you have beneficiaries of asset inflation, and it's hard not to see it. And it driving everything from Knicks tickets to airline seats. Owners of assets today have choices and opportunities that those below don't. And I think that for every owner, there is a renter. There is, somebody with a car payment, somebody with a credit card payment. So you have those that are, in essence, extending credit, extending opportunity, and those who are on the other side of it. And the gap to move from one to the other is, it's too wide and it's too costly. You look at, the average rate on a credit card, 20-some%. Well, to pay that off first, to begin that upward migration is all but impossible.
We're speaking with Peter Atwater, president of Financial Insights. He's a lecturer of economics at William and Mary. He's also the author of The Confidence Map, Charting a Path from Chaos to Clarity. Peter, let's end with the investment thesis in an environment, in a world where the Ks are sort of going parabolic in the other directions. We're speaking to you on a day where the S&P 500 could finish again at a new record. Doesn't seem like this idea of a weakening bottom rung of the K is holding back investment in AI, as Alex mentioned. What are the investment ramifications of society like this?
The investment ramifications are that there is an overinvestment in this abstract technology that we crave when confidence is extremely high. We imagine this unlimited opportunity in futuristic technology at every peak in confidence. And then there comes the backlash. And in this case, I expect the backlash to AI to only grow. And I think those at the top, particularly the proponents of AI, fail to appreciate the zero sum that is seen by those at the bottom. And the higher the market goes, the more those at the bottom feel that ultimately they will pay the price. Because to sustain that earnings growth, it has to come somewhere. And the most obvious target is labor.
Reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg Television, radio, streaming on YouTube and Bloomberg Originals. It is Bloomberg Businessweek Daily. On this Tuesday, May 26, 2026, I'm Tim Stenivek. And that is not Carol Masser. In for Carol Masser is Alexandra Semenova.
I have big shoes to fill.
You do have big shoes to fill, but we love it when you join us, and we love it, especially on a day when we could see another record for the S&P 500.
Yeah, and it's worth pointing out, Tim, too, we've been talking a lot about market concentration, how everything is just led by this rally in tech, but the S&P equal weight is actually also trading at record high right now. So really significant given the fact this is, of course, the version of the benchmark that gives the same weighting to a company like NVIDIA as it does to Campbell.
We're going to have more from on the markets from Charlie Pellet in just a minute. In the meantime, Alex did mention what the S&P 500 equal weight is doing. Wall Street kicking off, though, this holiday shortened trading week, stocks and bonds higher, all emanating from hopes of a peace deal. We're going to have more from Charlie in just a minute. We'll also have more on a peace deal, how to interpret the conflicting signals out of the Middle East and out of Washington. Bloomberg Economics economic statecraft lead joins us in just a minute. Also, the closure of the Strait of Hormuz really changing the affordability picture for many Americans. We're going to spend a good portion of today's program really focused on affordability. Alex, we got Peter Atwater of William and Mary joining us in just a few minutes. I'll talk slipping consumer confidence. We're going to talk about higher food prices and sort of the outlook for food prices. That's going to be with Wells Fargo's Agri-Food Institute's chief agricultural economist. And then on affordability, maybe a stretch here for many Americans, but buying an apartment here in New York City. Louise Phillip Forbes is going to be joining us from Brown Harris Stevens a little later too.
Yeah, really incredible that rent prices have gone nothing but up, and yet the demand is still so high. I'm watching TikToks of people just lining up.
Can you believe those?
They're bidding for apartments. It's crazy.
Yeah, it's really crazy. The mayor certainly has his work cut out for him. We're going to talk about that too. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much, Tim and Alex. And here's what's going on. Dow, just about the low of the day right now, while the S&P 500 index, you guys were talking about a record there, but a pullback for the Dow, down now by almost 200 points, a drop there of just about 0.4%. We do have the Dow Jones Industrial Average being led lower by Chevron, shares of United Health and Cisco, again, Dow right now down by 0.4%, down by 201 points. S&P 500 index 7506, up 32. That is a gain of 0.4%, while Nasdaq is advancing 230 now, up by 0.9%. The VIX holding above 17, just above 17 to be sure. The 10-year 4.50%, the 2-year 4.05%, and the 30-year 5.03%. Spot gold is down 1.8%, $44.86 the ounce, while West Texas Intermediate crude. Interesting day there. We do have WTI lower, $94 a barrel, just below now, but a barrel of Brent, yes, below $100 a barrel, but still trading higher. Brent up by 3.9%. The oil majors are lower.
Take off so high I cannot see. Adolf, now I got these rappers all breaking up a sweat. Cause every time I get up on the mic I come correct. And I learned it from the best, always dressing something fresh. Looking for a little dime, big button, nice chest. Yes, they heard I used to rock Guess, but now I'm rocking clothes that ain't in the stores yet. Travel back in time, I'm in a vortex, trying to make it work out, think I need more reps. Used to take a bus, now the board jets. Cause kids got me buzzing like a fucking hornet. They say I got next, tell them that I got now. It's all Disney, boy, my family proud. Make them say L, make them say O. The hoes that tell me yes, the same ones that tell you no. Whoa, I ain't just an average Joe, way above the average flow. Boy, my life is most dope. No matter where life takes me, find me with a smile. Pursuit to be happy, gon' be laughing like a child. I never thought life would be this sweet. It got me cheesing from cheek to cheek, hey, hey. And I ain't gonna wait for nothing, cause that just ain't my style. Life couldn't get better, this gon' be the best day ever. If it ain't about a dream, then it ain't about me. Go a couple full weeks without a good night's sleep. Imagination, making musical creation, a journey that I'm facing, plus the paper that I'm chasing. Got me crazy after saying with the lanes I see you hating, but there's nothing that you changing. Thumbs up, I'm maintaining, no complaining when it's raining. I'll be in another zone, move out my mother's home to a world to call my own. I ain't gonna play around no more, find a difference from the ground and the floor. If we gotta fight, I'll be down for the war. Thumbs up, homie, I'll be sure. No matter where life takes me, find me with a smile. Pursuit to be happy, gon' be laughing like a child. I never thought life would be this sweet. It got me cheesing from cheek to cheek, hey, hey. And I ain't gonna wait for nothing, cause
Huh? Sing? Okay. Let me see.
To the hip hop, the hip it to the hip hop. You don't stop the rocker to the bang bang boogie. Say up jump the boogie to the rhythm of the boogie to beat. Now what you hear is not a test. I'm rapping to the beat, and me, the groove, and my friends are gonna try to move your feet. You see, I am Wonder Mike, and I like to say hello. Up to the black, to the white, the red, and the brown, and the purple and yellow. But first I gotta bang bang the boogie to the boogie. Say up jump the boogie to the bang bang boogie. Let's rock. You don't stop, rock the rhythm that'll make your body rock. Well, so far you've heard my voice, but I brought two friends along. And next on the mic is my man Hank. Come on, Hank, sing that song.
Check it out, I'm the CAS and the OVA, and the rest is FLY. You see, I go by the code of the doctor of the mix, and these reasons I'll tell you why. You see, I'm 6'1" and I'm tons of fun, and I dress to a T. You see, I got more clothes than Muhammad Ali, and I dress so viciously. I got bodyguards, I got two big cars that definitely ain't the whack. I got a Lincoln Continental and a sunroof Cadillac. So after school, I take a dip in the pool, which is really on the wall. I got a color TV so I can see the Knicks play basketball. Him and talking about checkbook, that it costs more money than a sucker could ever spend. But I wouldn't give a sucker or a bum from the rock and not a dime till I made it again. Everybody go, hotel, motel, what you gonna do today? Is I'm gonna get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go, hotel, motel, holiday inn. You see, if your girl starts acting up, then you take her friend. I'm Master G, my mellow is on you, so what you gonna do?
Well, it's on and on and on and on and on. The beat don't stop until the break of dawn. I said a M-A-S, a T-E-R, a G with a double E. I said I go by the unforgettable name of the man they call a Master G. Well, my name is known all over the world by all the foxy ladies and the pretty girls. I'm going down in history as the baddest rapper that ever could be. Now I'm feeling the highs and you're feeling the lows. The beat starts getting into your toe. You start popping your fingers and stomping your feet and moving your body while you're sitting and you're sitting. Then damn, you start doing the freak. I said bam, right out of your seat. There you throw your hands high in the air. You're rocking to the rhythm, shake your dairy air. You're rocking to the beat without a care. Cruise the short shot MCs for the affair. Now I'm not as tall as the rest of the gang, but I rap to the beat just the same. I got a little face and a pair of rhyme eyes. All I'm here to do, ladies, is hypnotize. Sing it on and on and on and on and on. The beat don't stop until the break of dawn. I sing it on and on and on and on and on like a hot butter. The pop, the pop, the pop, give it, pop, the pop, pop. You don't dare stop or come alive, y'all. Give me what you got. I guess by now you can take a hunch and find that I am the baby of the bunch, but that's okay. I still keep in stride, cause all I'm here to do is just a wiggle your behind. Sing it on and on and on and on. The beat don't stop until the break of dawn. I sing it on and on and on and on and on. Rock, y'all. Throw it on the floor. I'm gonna freak you here, I'm gonna freak you there. I'm gonna move you out of this atmosphere, cause I'm one of a kind and I'll shock your mind. I put the jiggles in your behind. I say the 1, 2, 3, 4. Come on, girls. I get it on the floor. Come alive, y'all. Give me what you got, cause I'm guaranteed to make you rock. I said 1, 2, 3, 4. Tell me Wonder Mike, what are you waiting for? To the hip hop, the hippie to the hippie, the hip hop, you don't stop. Rock it to the bang bang, the boogie. Say up jump the boogie to the rhythm of the boogie to beat. Well, skittle bebop, we rock a Scooby Doo. And guess what, America, we love you, cause you rock in a row with us so much so you can rock till you're 101 years old.
If you can't beat them, then you pop them. You can't man them, then you pop them. You can't stand them, then you drop them. You pop 'em, cause we pop 'em like overhead and vodka. C3, okay, a millionaire. I'm a young money millionaire.
What is going on, everyone? Welcome back to the Daily Stack. Let's get this all settled here. And this is what happens without Jody. God, give me 1 second, my friend. We had all that time to wait, and then now it's let's see. We're gonna do this. We're gonna do this, and we're live. There we go. Welcome. It's Friday. How we doing?
Good, man. This first live stream, I've made a few hundred videos. I've never done a live stream, so that's a cool experience.
What happens when you go live, man? And I appreciate give a shout out quick to Daniel. I said I totally forgot to grab a guest here for Friday. Can you make it? And he told me to come to you. Daniel's been on the show and is absolutely awesome. We talked about Nebius. I still call it Nebius. And so we'll definitely touch on that here today. SpaceX IPO. Got to be blind if you're not watching that as well and seeing where that is going. So can touch a little bit on that, but wanted to quickly introduce yourself as I fix the bottom screen. We need my friend Jody back, who's out of town here for the past 3 weeks. So it's been a little choppy, but as you do that, just quickly introduce yourself and I will fix this up here.
Sure. So I'm Alistair. I actually mostly know on the internet for making YouTube videos for a few years. I've even now still a little bit. I made videos on emerging technologies. So on YouTube have like over millions. YouTube and other platforms combined have like 1 million followers, like 1 billion views on YouTube specifically. We talked about anything emerging tech. So that's AI, augmented reality, startups, anything that interested me at the time. Because when I started making videos, all the tech videos were just about smartphones and how many cameras they got and other boring stuff like that. Nowadays, still make some videos, but mostly just collecting that sponsorship revenue and mostly spend my time just investing what I made off of YouTube.
That's incredible. I actually did not do any research and did not know that. So that's phenomenal. So when's are you gonna come back, you think, with some videos you said, or you're just mostly investing?
Yeah, we're still making some videos, but it's mostly just when a brand wants to work with us. Like we're doing a lot of generative AI videos right now. One of Nebius's customers, Higgsfield, is a massive spender, maybe overspender. I'm not exactly sure what their economics are, but they're sponsoring a lot of YouTube videos at the moment.
Well, I'll have to hit them up for our show then as well. How did you get into Nebius, and what was this AI? It obviously was the big theme, right? So you couldn't ignore what was going on, but then it felt like the smartest people on the internet started saying, okay, let's look under the hood. Let's see this AI infrastructure. What are those second layer effects, third layer effects? And people have made their way down to photonics now and are making their way now all the way back. I heard Chris Mello talking about, all right, let's look at Amazon again, because they're going to see the very downstream effects of this as well. So tell us your investors.
How I got into Nebius. I guess for like context, like I usually have a lot of Nebius in the portfolio. At times that's been like at 100 or over 100% of the portfolio. Now it's 75. At times it's been 0 as well. It depends on is trading at, but I got into it last year quite soon after I read the Leopold Aschenbrenner's essay, Situational Awareness. It basically just hit me like a brick in the head. It made me realize that if I am not going to be contributing to AI research, then to protect myself from the future, I should be invested in AI infrastructure, at least like buy some insurance that way. And I actually came to visit Daniel in Switzerland, and he picked me up from the train station. And in the 15 to 30 minutes drive home, he basically convinced me on Nebius. And I think I sold all my NVIDIA holdings for Nebius that day. Then throughout most of last year until it was like over 100% portfolio allocation, and then played with it throughout. But the thing that convinced me initially was that so there's over the months there's been like a lot of almost like safety nets to holding Nebius. I think the downside of holding Nebius is very low. But in the beginning, the main safety nets were its subsidiaries. So from all my friends in VC, everyone knew like ClickHouse was like such a hot thing that when you listen to how they talked about ClickHouse and then looked at Nebius stake in ClickHouse, you could almost justify like the maximum downside of Nebius still being okay because ClickHouse is going to perform so well. Then last year as well, this was like before their like earnings in August last year. If you look at like the multiples they were trading at and compared it to the only comparable, like mainly comparable option out there, CoreWeave. I think CoreWeave at times last year was trading at like 25 times sales or something like that. So like Nebius right now is not anywhere even near close to that. It just kind of, there's this story that because it kind of relisted instead of IPO'd, it was overlooked, and because of that, all of its like all of his multiples were kind of crushed, and it was underappreciated. So
yeah, I mean, real quick, not to cut you off. I think some of the early fears, you know, they started out and spun out of Yandex, right? Which obviously Russia and U.S. tensions are always kind of in the air somewhat, and it was something I looked into, you know, as understanding like, was he truly defected? You know, did they actually like completely legally separate? You know, does Putin still have his hands in it? You know, and so it was kind of interesting. I think I saw people talking about this online too. So it did probably scare some investors early on. But now we've seen that, you know, they're getting heavy investments and big news.
But you know, last year, that was one of the main reasons to buy into it. Actually, like if the fact that people saw Russians as kind of sketchy, like that's gave me additional confidence to buy it. It felt like there was additional mispricing because actually like Russians are insanely smart. Like the best like mathematicians and chess players in the world are Russian, right? So it felt like there was some mispricing around that specific fear.
Yeah, I mean some of the other subsidiaries too, Avride, Toloka, 1010. So I love that optionality as well, or not even optionality, but the cushion, as you kind of phrased it.
Yeah,
you can't go super low because it does have, like many of these other companies now. I was looking at Anthropic's cap table, and it's insane, like how many companies have invested in Anthropic and waiting for that IPO as well. And we're seeing this SpaceX and Tesla, you know, today as well.
Yeah, you know, Anthropic specifically, I had dinner with a friend a couple of years ago, and we were discussing. This was before I got like really heavy into investing. We're just somebody like I guess like through the grapevine like offered us to get into Anthropic at $1 billion valuation. I don't know if in hindsight it was like actually a bad idea to miss on it, because now you're hearing all these stories, these like 2-layer SPVs scamming people.
Yeah.
But I do think back to that, like at $20 billion, if even with like a 20% fee on that, it would have done pretty well by now.
Yeah, I mean, I'm feeling it today. I have two different friends that one was in like 100 billion, another 150. I had a similar SPV reach out at like 200 billion. And, it, you know, it was just those things that you were just talking about kind of came up in my head. Like, you know, is this legit? You know, what's the carry? And it was still early. But looking back now in hindsight, probably should have done that, right? So the big news I did want to touch on, obviously, coming into the NASDAQ 100, why that's so important. What does that mean? Talking about like that cushion you were just discussing. Now passive funds have to come into this, right? Now a lot of different folks that come in are usually kind of not the paper hands that retail can get spooked in one, you know, article that's coming out. So yeah, talk to us about why that's so big and where you see potential upside still from here.
Yeah, so the NASDAQ, I think there's a few components to the NASDAQ 100 inclusion that are really important for Nebius. One is what you said, with these passive funds buying in, it means hopefully volatility is a little bit lower. So for me personally, that's great, because I've always wanted to buy. I used to have leaps and like bull spreads and all like options in Nebius, and now I sold it maybe at like 160 when I thought we were overextended, but it's always felt difficult to get back in because the volatility is so high. And in theory, with these passive funds invested in Nebius, the volatility should decrease. That's one part. But the second thing, which I think is maybe even more important, is it tends like when you get included into these indices, your credit rating is a lot better as a company. So it should, in theory, enable Nebius to raise capital at even better terms than what they're getting now. In theory, of course, like I'm not at the table there. So those would be the main reasons I am.
Yeah, and you got to say the caveat, because I was like, oh, it's only upside. And my friend quickly reminded me, he goes, look at TTD after the trade desk got added. You know, they've come down significantly. So in most cases it is positive, right? And funds can now come in that they, you know, weren't allowed to before, and these big buckets that people are buying. So yeah, and I mean that's an exciting. And then Anthropic announced, I think someone put a Twitter post out that 10 gigawatts, they quickly corrected it down to the truth, which is 1 gigawatt that they're looking for. And obvious, Nebius has been in the conversation there. So that's kind of like some upside potential, which
I'm actually not 100% sure that will play out, because like the specific wording was Anthropic wanted to lease the data center. So like they would build, or they would operate everything on their own. I'm not sure how into that Nebius would be. But yeah, I'm hoping for something like an Anthropic deal as well, like with one of these really big labs. We've seen them, they're already partnered with Advanced Machine Intelligence. So they're not unfamiliar with working with these labs, but I'm a bit more skeptical about a potential Anthropic deal now than I was maybe like a month ago.
I was talking with a friend, if it's like, because his wife is, Leopold's wife is like the chief of staff, right? Then he came out with a huge position. So my understanding, he's got the spotlight on him. I'm assuming he did everything by the book and would not play around with fire in that sense. But there is the closest nepotism as you can get there. What do you think in terms of like, you actually brought this up, which is my potential bear case in a few years. I think, we're good for the next year or two. My concern is some of these hyperscalers, build out their own, those are ready. Maybe they figure out different ways to use less power, less GPUs, right? And is that a fear of yours in like 2-3 years out, that technology advances and there's another hyperscalers can do this themselves somewhat?
Yeah, well, I think over if you're taking like the situational awareness view, over the next few years until 2030, we'll be aiming to build like hundreds of gigawatts of data centers. So I think the market is big enough for everybody to win, and especially someone like Nebius, who operates at like such excellence. I think they'd be okay. And if you also look back to, like, a lot of people compare Nebius to, and they say they're like the next AWS, or like the AWS of like the AI era. Many very, very large companies like Netflix still operate on AWS just because it's easier. Like, you don't want to, maybe your business, your time is better focused on other aspects of the business that is not like building out data centers. So at the moment, I'm not too worried, but of course, like, AI moves so fast, I am like monitoring the situation just like everyone else.
The other piece too, which I find interesting, and this, I keep bringing up this Chris Camello podcast because it really just nailed it home. He's like, and you even alluded to this too. You like the fact that Russia was a fear of people, right? Do you fear now that maybe it's no longer a secret, and the secret's kind of out on Nebius? And
maybe like it feels like maybe it's like a hindsight thing, but that, like, just when I look at on Twitter, when people post their like year to dates and they're like 1,000 or 2,000%, I do think like, oh man, this was so obvious. Like, could have just gone in with options and held it the entire time. I do feel a bit salty about that it's now more well known, but I don't know. I think there's still like a long way to run. This could be very likely could be $1 trillion company. It's still got a really long way to go, and it's only going to get there with people realizing the potential.
Was it Goldman Sachs, or they were just at there was a lot of bears in the room, and that got, I saw a Twitter, I gotta find this now, where it's like he just their CEO just spoke and everyone was kind of blown away at the upside, and we've seen it today. I mean,
the inflection events, right?
Yeah, it popped up. I think it's up 5% today. CoreWeave was up 9%. My question now too, I know they're the closest analogy, I'd say, to each other. CoreWeave obviously has a lot more expenses. Do you think there's more upside now potentially that, when you put it side by side, there's a lot of way more cost. Nebius has these subsidiaries as well. So like I try to choose the best company within the space and not try to compete with things, but curious what your thoughts are on CoreWeave.
Yeah, me too, generally. I think so. CoreWeave, if you look at like when SemiAnalysis makes the report ranking all of these providers, like CoreWeave is always at the top. So clearly they are actually good at building data centers. Generally, I try to stay away from like ex-Bitcoin miners turned AI data centers because I don't exactly know how those skills transfer. Clearly, CoreWeave is good at building data centers. But personally, I prefer to have like maximum of maybe like 5 positions in the portfolio. And I find it a lot easier to have something like 5 positions or less if I can really, really trust the management, if I know the management is really, really good. if I know there's very low risk to the business, like financial risk, especially. I'm not, my background is in like engineering and data science, is not in like accounting and finance. So when a business has a lot of debt, it's just not, I feel like that's outside of my zone of competence for like how healthy that debt is. And CoreWeave obviously has a lot of that. And maybe it's like unfair advantage, but because like I've talked to management and met people at Nebius, maybe there's some bias there. Yeah. It just feels like I can trust the team a lot more. Like everyone so far has been really, really smart. Like not just at management, but like layers below. And even at the like very bottom, I was at one conference before last year, meeting Nebius. And there's this like random marketing dude there that I spoke to for like 5 minutes. And I realized he used to be like a chess grandmaster, like national champion or something. And he was just like some random marketing guy. So just like throughout the entire team, it's just such high quality people. I feel like I can sleep very easy at night with them being one of 5 and maybe and then above a 50% portfolio allocation.
What I guess would invalidate your thesis? I always like to put bear case here at the end as well, but
yeah. So I think one of the scariest things would be the demand not being as high as the capacity build out. Like if with every single infrastructure bubble in history, there's this massive build out that does not meet the demand. That is very possible here. When you adjust the like .com era telecom build out, they spent about like $1 trillion in that build out. Now we are getting close to $1 trillion a year. Like we're in many several hundred of billions of dollars a year. I believe the demand will be really robust. Like we would just want as much AI as we can get. But if there is any sign that, like, for example, if Nebius releases net revenue retention numbers and they're not like above at 100% or above, I will spend a lot of time thinking about it. Like, I think every customer that gets any compute now, if they stick around as a company and grow, they will just want more compute. If that is not the case, that will change my hypothesis. Yeah, that would be the main thing. That's the thing I'm most worried about, like, because we have no visibility into retention.
Yeah, it's always one of those things. I feel like I'm late, but I'm usually like early. One of my friends used to say that all the time too, but it feels like that with AI, because when I talk on these podcasts, I'm talking to people like you or people like Daniel and the kind of maybe 1% that's like in this shit every single day, right? So I always fear that I try to go talk to my normie friends, sometimes to try to get a pulse of like where we're at. And I still think we're early. And this is, we're a Bitcoin show oftentimes. And so Bitcoin, I still think we're very, very early here, but with AI, it's the new internet. Like what is the market cap of the internet, would you say in some senses, right? Because like the last time we did a Google search has been months and months ago, now every single time. And it's with any technology, like someone was just saying this, like the horse and buggy turned into the car because you can get from A to B faster, right? Same thing now for answers or for any logic. It's like, all right, let me go. May not load as quick as a Google search, but you're getting the direct answer. And so you got to where you're going faster, getting the full knowledge case. So that dissipating either.
Takes over. But if you just imagine, like anecdotally, like every part of your life, every business you interact with, like almost everything will be improved by AI. Like you will want an AI basically always, unless you're in the bathroom or something, but like constantly on when you're using your computer. That will use so you'll use multiple tokens, many tokens every second. You maybe right now will start to at least myself for YouTube videos, we start to generate videos more and more, and that's like much higher like bandwidth activity. So there's no way to know what the market cap is, but you can just look at like so many different aspects of life and see how it improves all those aspects. And from that, you can at least get this gut feeling that if everything improves, then it's maybe some multiple or at least some percentage of the total market of everything.
Yeah. I mean, the one other, is you'd think that these guys will be the leaders anyways, right? With new technology, I know Micron was another stock let's talk about, because I saw you tweeting about them a bunch. And thanks to Sammy, Smarter Trader, I got in at around like 200 something, and and continue to climb. And I still think we have a long way to go there with Micron in terms of memory, because their technology is just so much better, I think, than their competitors.
With Micron, it could be like I'm not like I'm not like a accounting or financial guy, but like these memory companies are generating so much profit, and their market cap, they're not even though they're trillion-dollar companies now, they're not near the largest market cap companies in the world, which they will generate more profit than. So when you combine that with knowing that basically especially for high bandwidth memory, like that is the limit on how big these models can get. And so that is the limit on all the tailwinds with you.
Yeah, I mean, the way I look at it is like the memory is your brain, and as humans, and I know this is probably a little abstract, but like as humans become more and more, I mean, your AI becomes closer to becoming a friend and a buddy, and it sounds so crazy to say out loud, but it's like, damn, they really understand me. I don't need to repeat things to them over and over again, and like all that has to do with memory at the end of the day, right? Is how much it can remember and maintain, and using this, like the simplest logic, it just feels like this is going to, more and more people are going to come online using this. There's going to be bigger, things. The only, like the news that I was talking about was when Google said they can compress memory by 6 times. Micron dropped on that news pretty well, and so that could be something that comes out, but like Google actually hasn't come out with that yet. They've been front running this news cycle now. I think they did it with quantum too, like 6 months ago. They're like, we have quantum figured out, and so which was really uncharacteristic, I think, of Google. But the past 2 big news things, they haven't launched yet. And so it was interesting.
Yeah, that is interesting. But I think it's safe to say, like, now that we've seen the DeepSeek moment and this like Google memory moment, it like anytime there is like a dip like this in the future, as long as demand for AI is still robust, you can probably buy that dip pretty safely.
Yeah. What you said you had 5 stocks, and give a shout out to my buddy Joey Salitro, who always says you consolidate to get rich and then diversify to kind of stay rich. So and that's true. I feel like every time I've gotten down to like 5 or 6 stocks, that's when my account does amazing. Then I go on Twitter, everyone's taking screenshots, everyone's got a new stock of the day. Then you're chasing that one. You think you're early, you think you're late, so it becomes chaotic, and all of a sudden, before you know it, you have 20 stocks on your screen and you can't keep up. So what are some of the other 5 that you're holding right now?
Yeah, so actually at the moment I'm holding 2, but throughout most of this year, I've mainly held something around 5. I'll just go through, like the second one at the moment is SK Square, which is a holding company that owns a lot of SK Hynix. The main thing to know about them is SK Hynix is part of the memory duopoly, high bandwidth memory duopoly, and SK Square 99% of the net asset values of SK Square is SK Hynix, yet it trades, even like right now, I think it's above a 45% NAV discount. So you're basically getting almost like $2 of SK Hynix for every $1 you spend on SK Square. So there's a reason why there is this discount, of course, there's a reason it's not totally filled, like no one's arbitraged it yet. It being in Korea means all Korean stocks trade at a discount, and because this is a holding company in Korea, it's almost a double discount. But the idea is that this discount will compress over the next year. You have both the Korean government doing a lot of initiatives, like their Value Up program, you can Google it, a lot of initiatives to decrease the Korean discount, as well as SK Square as a company, their own management is heavily incentivized to close that discount from now around 45 to 50% down to 30%. So it's almost like you're getting levered SK Hynix. And at least I cannot buy any options on SK Hynix.
Reminds me of all these treasury companies where they were below MNAV, and now they're they were the inverse of that. They were trading like 10x how much Bitcoin they had with no operating business. And I was like, is Wall Street like way smarter than me? I never understood that level of multiple, like 2x maybe, in the case of like strategy potentially could get there again if they do loans and lending and whatnot. That is interesting. We got on DRAM early, which was the ETF that I felt, initially they IPO'd around like $30. I don't know what it's at today. Got up to over 60.
Something like that.
Big piece of them is SK Hynix as well. And I think, I got to dig into this. Why do you think there's the gap's not there? You think just people are not paying attention to that as much? And why did DRAM get so much more attention, I feel like, on Twitter?
So actually, I think like most people, like when I advise my little brother to buy stocks, I mostly just tell him, just if you're getting memory, just to buy DRAM, just because like it is somewhat safer, and Actually, I don't know. Maybe in like the last couple of months, it might have even outperformed at SK Hynix, or maybe
because it's got Micron in there as well.
Yes, so it's got like you basically have like multiple sub themes within memory there. Like with MU, sorry, with Micron, it's a potential like target for the Trump administration. Like you have those kinds of tailwinds, but then also when you hold these like Korean stocks like SK Hynix and Samsung, they're trading at such low PE multiples. Like for every, I don't know, it's something like a 5x PE multiple. So there are many stocks I've held before where I am paying maybe like 10 times that for $1 of sales than what you're getting for $1 of profit right now. And in general, like it's just a really good theme to invest in if you believe we will want to have smarter models. Based on our current technology, this is the limitation on how big the models can get. Like whenever you run inference on ChatGPT or anything else, it has to load that model into high bandwidth memory. And the size of that high bandwidth memory is like, it's controlled by
models
these.
Keep getting better and better and better. You know, like they're giving us the drug dealer treatment right now. Like first hits free of Fable. And then, you know, in 2 weeks, people are going to get the rug pulled from them and they're going to be like, oh shit, like I'm so used to going that speed and that level of, you know, it's pretty smart.
Yeah, exactly.
You know, it's nothing new there, but yeah, I'm on board with it. I think memory is far from over still. I was actually thinking of this and I was trying to find some like stocks that were kind of that second layer of the space momentum too. Cause you saw all the hyperscalers, you saw, you know, ChatGPT and Anthropic, who are not public yet, those got attention. Then people went to that second layer, as I was mentioning, then photonics. Then they're kind of like, all right, what else is left of AI? So I was trying to look at some of the underpinnings, you know, of the space economy, which I still think is early, but I think I was listening to the Gemini podcast and he brought up a good point. It's like, how do they maintain this excitement with Rocket Lab and with SpaceX? They're going to need to consistently be launching rockets and satellites, right? And so it's going to be
so with space companies, I did have ASTS for a lot of last year. I think they'll always trade at a just because like space is cool. Like they will always trade at a premium.
It's attention.
Yeah, exactly. You get these like awesome rocket launches and like blowups and all of that. Personally, I don't have any more just because I feel like some of this, like these AI trades, is like the obvious thing to do, and the space thing is like the cool, non-obvious thing to do. But I think like right now, maybe these dips like with SpaceX is actually a good opportunity. Like in theory, when all these larger funds now are forced to investigate and analyze SpaceX, they'll have to look at competitors. So when they're looking at the Starlink business, they'll have to look at ASTS. When they're looking at the payload business, they have to look at Rocket Lab. That in theory should mean that the extremely high multiple of SpaceX and the lower but also high-ish multiple of ASTS and Rocket Lab, they cannot be both that far apart. They can't both be true at the same time. They should somewhat consolidate. There'll always be an Elon factor, but they cannot be so far apart. So actually, I think ASTS today is getting close to either the 50 or like 200 simple moving average. So it's maybe a decent entry point to get back in. Yeah, good company, a little bit expensive, but yeah, still a good company.
Let me, I was just pulling this up to live in my heyday. We brought on Peter Beck, who's the CEO of Rocket Lab.
Oh, awesome.
My buddy Shai Balur, who's now very famous on Twitter. But this was crazy. I won't play it, but Pounding the Table, Peter Beck, go watch that. This was when the stock was $3.
That's crazy.
And so I bought because after we interviewed him, we were like early on with, and we'd have tons of people watching on Sundays, and like these small caps would move, and so we always had to wait like a day or two after the public like get in. But this was crazy because I remember I bought Leaps for $7 and it went up, it ran up to like 27, and then I sold them. And then this is like another failure of a story here. Although I made a ton of money off of it. So
I wouldn't be too upset.
Now it's at, 114, I think I saw today or something. So yeah, that was pretty crazy.
Yeah.
What else should we know about you, your investment thesis? We can keep it a shorter day today. I know it's Friday. People want to live their lives, but
Yeah, I guess like the main thing with like how I invest is the main thesis is that inference, especially, which is like your usage of these models, is what's going to grow the most. There's so many like growth vectors for it. Like, so one, like I mentioned before, you want to be live, you want to do like heavier data, like heavier loads of inferences. You will want to use agents. Those agents will use other agents. Those agents will use other services. So you have like, there's a lot of vectors pushing inference forward. And so if you just like, my idea is if you just try and align yourself with the growth of AI inference, you should do well, because that, in theory, like that's going up like 100x a year or something crazy. Yeah. So the way to invest in that is to invest in AI stocks, but some of these stocks are overvalued. Some are more fairly valued if you start looking down the chain. So that's usually how I start when I think about like the first principles, how to construct portfolio, what's like my main AI play right now is Nebius. But then these companies like Nebius, they'll still go into, like bump into other problems. Like right now in the US, like Nebius is great because they're globally diversified, but they still have a lot of data centers in the US and a lot of these other providers in the US. You see all of these reports, I think yesterday or the day before, recently Crusoe like got like a 1.8 gigawatt plant canceled or like majorly delayed. So this stuff happens. And if you look into what are the reasons these these data centers are getting delayed, so with Nebius, the rumors were like air permits or like noise or water, all of that. You can try and invest in the solutions that they would buy to undelay themselves. So in this case, it would be like fuel cell providers like Bloom Energy, which they ended up getting a deal or agreeing on a deal with.
Like Bitcoin to AI. It's like it keeps going. Have you heard of Penguin Solutions? We had a guy on yesterday. What is it? Tuesday, maybe it was.
Yeah, I haven't looked into that in like maybe a year now. Yeah, I tried playing like one earnings for it and got smoked, and I was just like, I'm done with it. Well, I'm curious, what is the pitch?
So they helped to build. So like Caterpillar has had a nice run to like anyone that's building these, and so they pivoted basically to build from my understanding is building that, and they have like the verticalization of it as well, because they like have different pieces that can go on the inside. So I need to do a lot more research on it before I can sit here and pretend like I can talk. But we had our guest on from Tuesday that did a really good job. I mean, I bought some. I ended up buying some afterwards because I was like, all right, this is I already have a ton of it Nebius, but I would have bought it here as well. This is like the community show we do on Fridays, and we bring other people from Twitter, let them like talk about the stocks they love, and then it's like my old show is pounding the table, so I have to bring that back. We're like, all right, I'm pounding, I'm buying it. 2 of 3.
I think it's also usually a good strategy if someone really smart really likes a stock to invest first and then look into it later.
Shoot first.
Because they would have done all their research. If they have a significant allocation to it, they would have done a decent amount of research, ideally.
Well, and that's what I did with Micron, but I didn't buy enough. But it's still up, 20% or more than that right now. So
yeah, you never have enough. I actually have one question.
Oh, go ahead.
I have a question for you because so I haven't published this anywhere. Only I think Daniel knows this, but I still have a decent allocation to Bitcoin. It's something like 10% of my overall net worth or portfolio, something like 10%, because I have this like weird legal structure where in my company, I can basically only really buy, it's really hard to set up a brokerage. So I just bought Bitcoin with the assets.
Yeah.
What is as you are someone that invests in both AI and Bitcoin, I don't know many people who do that. What is your explanation for still holding Bitcoin? Give me a reason to keep it instead of selling it and buying gold.
The very simple reason is governments are going to continue to print money. It's the most pristine form of capital. It is a belief system. So it gets down to like the conscious thought of like, what is money? That's where like a lot of people will start that conversation. And if you get enough people to believe in it, realize, what is gold? You're not typically going to be holding physical gold. You're not going to leave the country with physical gold. They've taken gold before. There is concern that the government could do that as well, but then they'd kill their own bags, right? And I think for me, I've been so, bought in since 2017, but it didn't really click for me probably until like the last couple of years. And once the ETFs came in, that provided that kind of like soft, I guess like the floor somewhat. of where it could go. Obviously, ETFs will come and sell anything they can on either side. Yeah. But for me, it's just the printing money versus 21 million ever. And so I'm holding it. For me, it's going to be a lot of the smart people, and who knows, right? Like there's no earnings reports. It's just kind of news. Yeah. And so that's like the kind of craziness behind it. And, you know, when I talk about it out loud, it is kind of funny. I always joke with my friends. It's like one day we'll look back and be like, how do we trust some random person named Satoshi, you know? But at the end of the day, what I find fascinating is we've seen it. I've seen it since 2017, right? They go through ups and downs, and everyone wants to sell when it's at its floor. Everyone's talking about it when it's at its peak, right? And it's just one of those things where any true like Bitcoiner at this point is just like, all right, whatever, this is cheaper Bitcoin, because they know that over time governments are just going to continue to print and print and print, and that will devalue. And so there'll be one currency that, you know, people can ultimately know that they're not going to print more of ever. So we'll see. I mean, I'm holding on. I'd say, I mean, I could see it go lower, right? You know, and I could see it maybe hit 48, 38 is the lowest, absolute lowest that I've heard. And that's kind of based off whales, like average buys. But
okay,
I don't know. My whole belief is in 2 years, 3 years, we're going to start to see a huge, you know, spike again. And then it will start to stair step over time and just become, you know, the ability to use it as collateral is just very easy. And, you know, it's not like a real estate. So you start thinking about like collateralization of it as well, and using it, you know, for that. It's a lot more liquid than a real estate could even be, right? And many other assets. So
I hate real estate.
I'm a Bitcoiner. But I mean, like, if I was a diehard Bitcoiner, like some of my friends are 100% in, I would have missed this AI trade. So I still like making at the end of the day, but
my girlfriend is 100% in.
You know,
the AI trade.
You can't. I still think there's upside here, but that initial ramp was crazy the past couple months. I
just feel like there's such major opportunity costs.
Yeah, no, I mean, right now, you know, I just do DCA. So every single week, I just buy some without kind of looking. There are tools out there to probably do this a lot smarter, but I just have it at the same time every single week. I'll buy $250 for myself, $50 for my daughter, and
nice.
Out of sight, out of mind. And like, if I'm dead wrong, I'll feel like an idiot, but I think Bitcoin will be there, and in probably 2 to 3 years, it will start to ramp up close to $1 million. So,
okay. I'll check back.
Save it for your grandkids. Bitcoin for your grandkids. That's what it is. Anyways, such a pleasure. Thanks for coming on last minute too. That was fun. We'll definitely have to have you back. And happy Nebius Day to anyone that celebrates. That's becoming my slogan. I just tweet that out any Green Day, which is more often than not.
Well, I mean, today we can say happy Nasdaq inclusion day for all Nebius.
Nasdaq inclusion day. I followed you on Twitter. Everyone go follow. Twitter is right here at the bottom. And I'll tag him as well. I think you reposted it, so everyone should follow Alistair. But thanks so much. Awesome. I'll see if we had a few comments. See if anything good. Someone's French, they can't understand what we're saying. And Renato says, "What a show!" But we will be back next week to our regular scheduled. We'll make some. Renato, I know, is wanting sats. We usually give away Bitcoin, but I don't have the thing to run it because Jody is our tech guy. So we'll make up for it next week. We'll have a big Friday stack for everyone. But Alistair, appreciate you coming on. Everyone enjoy their weekend, and we'll be back Monday at 12:30.
Thanks, Avi. See ya. Bye.
See ya.